Okay, we're now moving on to the last financial statement for this part. And it's called the balance sheet. So the balance sheet has to be recorded last. You'll see why in a moment. But the balance sheet runs through all of our assets, all of our liabilities, and owner's equity. The other three elements that we haven't used yet. Okay, let's have a look. So, final financial statement. The purpose is to show the value of all your assets, value of the liabilities, and owner's equity. And it's the value of all of those that exist as at balance day. So balance day is just the end date of a period. So maybe it's 31st of December, 31st of March. So we use, this is the point number 3, as at. So we always use the word as at for a balance sheet because it's only at one day. Because the bank balance, well, that changes every day. So this is just on one day. This is what the balance is at the end of that period. Now, the objective, last part there, is to look at our owner's equity and make sure it balances to our net assets. So you'll see that there's an equation that happens in the background. We take assets minus liabilities. That equals net assets. So if that balances to our owner's equity, our balance sheet balances. And you should celebrate at that point because you finish the financial statements, you can have a bit of a celebration. Okay, so just mentioned it. Here's the equation. Owner's equity should equal the total of our assets minus our liabilities. Now I have swapped it around the third point. You don't really need to worry about too much about that. It's another way of thinking about this though. Our assets, all the things that we own, we've funded them through two different ways. We could have borrowed money from the bank, that's one way, or we could have got the money from the owner. And so that's what that second equation is sort of showing. That what we have in the business, well, it's equal to, did we borrow it from outside, or did we get the money from our owner, the inside? Just a different way of looking at the equation. Okay, so here's the layout. Again, there's two different columns, one for the individual, one for the totals. First thing you should always start off is owner's equity. So, go through the trial balance, pick up the items that say OE, and you'll only find one in this case, capital. So the capital is there, you can put in the balance in that first left-hand column. Now, important little part. The next one is not on the trial balance. So you will have to remember this. You need to put in the profit or the loss from your income statement. So have a look. What's the profit or the loss? And this gets added to your owner's equity. So profits increase owner's equity, so you add them on. And losses actually reduce owner's equity. So you actually take them off if it's a loss. So you put the two things together, capital and profit, and that gives you total owner's equity. And make that total. Right, now we start running through the items from the trial balance. And so the first thing you should do is the assets part. Run through all the things that have an A next to them, or the things that we own. And so this could be bank, debtors, vehicle, could be computers, could be furniture, equipment, all of these things. These are assets, things we own. So put them, each one takes up one row, and then put all the totals in that left-hand column. Then you want to total them, total assets. And you'll get the total figure there in the right-hand column. Now, the next part is you want to grab the liabilities, all the things that we owe to other people. So we've got all the L things from your trial balance. Well, these are the balances that we owe to other people. So it could be creditors, could be mortgage, could be loans, all the things that we owe to other people, pop them in line by line, and then put the balances of the amounts, and put the total liabilities. Okay, once you've done that, it's time for the equation to happen, to see if your balance sheet actually balances. So you take the total asset number and then you minus the total liabilities number. And that gives you net assets. Net assets is just another way of saying the assets that you actually have, taking away all the liabilities. Okay, what's actually on hand. And so you write that number in the totals column. Now, that number should equal owner's equity. So, owner's equity should equal that net assets number. The two should match. If they match, celebrate. If it balances, you're in luck. Okay, if they don't balance, then unfortunately you're going to have to go back and figure out where you've gone wrong. But that's okay. First time doing it, you know, some people do make mistakes. So you can do it for yourself now using some of the exercises we've been using. Go through, prepare a balance sheet, use the trial balance, find all the items marked A, L and OE, and don't forget to use the profit and loss from your income statement, and that needs to go into the owner's equity section.